Good afternoon, everyone. As Sarah's mentioned, my name is Jane Cooper. I'm the Export Finance Manager for Staffordshire, Warwickshire, Birmingham, Coventry. So part of my remit here is to work with businesses, but also to try and help spread the word as to what UK Export Finance can actually do for exporting businesses. Now, I don't know whether any of you know a great deal about our organisation. We are part of the Department for International Trade, so we work very closely in association with our colleagues, the International Trade Advisors. But we concentrate purely on once the trade advisors have helped get you into market, help you find your customer, helped forge that deal, we work at the other end, which is looking at the finance and importantly making sure that you get paid for the transaction. So our whole ethos, our whole mission is to ensure that no viable export should fail for want of either finance or insurance. Now, our organisation has been established now for nearly 100 years. Used to be known as Export Credits Guarantee Department, where we were known for supporting the large contracts. But when the financial crisis occurred in 2007-2008 and the banks were unable to lend to smaller businesses, it's very much obvious that government had to try and do something to bridge that gap and to provide support for smaller companies and down the supply chain, which is when our short-term range of products were actually born from that. And they've actually been out in market now for nearly 5 years. And I'll explain a little bit about how those products actually work, a little bit about our criteria, and also I'll talk through some case studies just so that you can see the impact it has on live businesses. First of all though, in terms of accessing support from UK Export Finance, as I say, we're a government department. We are not specific to any particular sector or any particular size company. So we will work with any organisation, any registered business that we can. Now, as I mentioned, I'm an export finance manager for this region. I'm one of 24 managers based around the whole of the UK. The reason we have that structured network is so that if we're talking to businesses locally, we can advise you about our core products and services. But also importantly, if we're unable to find a home with your bank or another financier for your proposition, we know what else is available in our region in terms of working with the growth hubs and the LEPs, what local grants might be available for that particular unique area. So it's very much using that local expertise. And it's worth pointing out it is free, impartial government advice. Again, very important to note, we're not here to compete with the private market. So if we can find a private market solution through a bank or an insurance company, and we can work with you to do that, and we don't get involved any more than that, that's great, job's done. The export can still happen, and if we're not needing to support that's fine. So we work with banks and insurance brokers, and we're also trying to work more closely with other interested parties. For us as a small government department, it's very important that we try to get the message out to as many businesses as we can reach. And so to do that, we're forging associations with relevant trade bodies, trade associations, and also trying to get accountants and other professional advisors fully signed up to what we do so that you should be able to at least receive some advice from some source. Of course, you can always contact us directly as well. Now, going back to the structure of ECGD and how we now work with short-term products as well. Very simply, our product line will fall into that. It's either long-term support for the larger projects or short-term support for trade finance. So for the trade finance, this is where our products and our support focuses around the UK-based exporter. This takes place very simply, and I'll go into this in a little more detail, but very simply it takes place with guarantees that we can provide to your bank to act as security. We can also help banks with issuing contractual bonds, whether they are tender bonds, advance payment guarantees, performance bonds. We can help work with the banks to help maximise the availability of those. The other side of the coin is where we look at the long-term projects. Now this is where, rather than providing support to the UK-based exporter, we will actually provide support to the overseas buyer. So it would be your buyer. We can provide a guarantee to the overseas bank to provide a facility to enable your customer to buy your goods and services. Now, with this kind of product, it's very much, as I say, going back to the large ticket transactions, and it is for capital and semi-capital equipment only. We generally say that unless a transaction is above £5 million, it's difficult to get an overseas bank to engage with us. We are working on solutions for smaller transactions like that though, so please, it's worth keeping in touch with us, keeping an eye on our website, and so we are hopefully having some successes in being able to support smaller transactions, smaller projects in that way also. Now, what I wanted to do is just talk through a couple of case studies that really highlights how these products can work in practice. The first one is a company that's based up in Scotland called Burnt Island Fabrications. This organisation had been active for a number of years. It's a well-established company active in oil and gas. Now, as they started to see the increasing importance in renewable energies, they started to diversify. And part of the support they wanted to look, part of the role they wanted to play, is by producing steel-based fabrications for the renewables. Now, they became involved with a Dutch contractor, and it was to contribute to a large project which will actually become the third largest wind farm globally. Now, it's a huge project, and the portion that they were able to participate with was on its own £100 million. Now, as part of the process of being involved, they had to provide a number of performance bonds and also warranty bonds, which by their nature could be a little bit longer term. Now, banks are very happy to issue these kinds of guarantees on behalf of their customers, but quite often what they will do is either ask for cash as collateral to secure that liability, or they may mark it against their bank facilities. So suddenly going into this new arena with these huge potentials for contingent liabilities and have to provide cash for that, the organisation would have been very restricted, very squeezed on its working capital. So the way we supported this, alongside RBS Bank, with the bank involved in this, we were able to issue a government guarantee to RBS to act as security for those performance and warranty bonds. So in effect, the bank no longer needed to take cash as security. Now, we don't underwrite the whole amount. We still expect the bank to have some involvement there, so we will guarantee up to 80%. And in this instance, the bank then was happy to just continue with the 20% risk on its books as well. That really transformed the organisation. That project is still being delivered as we speak. There are more bonds that are due to be issued, but at least we were there and were able to get them started and contracted to that project. Now, apologies, I couldn't actually find any case studies that I could talk about that were all relevant in the sector. So the next one is a little bit diverse, isn't it? But it just explains the point as well. Now, as a company based in Nottinghamshire called Esprit, and they have been involved for a number of years now for developing digital marketing boards. They have self-grown to a turnover of it was about £3 million. Through their website, they picked up a contract from Australia to supply 1,200 of these digital display boards throughout all the malls across, particularly I think it was Westfield malls across Australia. So it was a huge contract for them, and it was actually worth 20 million Australian dollars. So in one fell swoop, if they were able to fulfil that contract, they would be quadrupling their turnover in 1 year. Now, they looked at their trade cycle, they looked at how they could try and generate sufficient working capital. They spoke to their suppliers, and they managed to get extended credit. They managed to get quite a nice prepayment as well from the customer in Australia, but they still had a gap of £1 million for working capital, which the bank wanted to support them on, but couldn't quite go the whole way. The bank introduced us to the business. We were happy with the background, we were happy with the buyer, we were happy with the overall trade cycle. So what we were able to do is again provide another government guarantee to the bank to provide 80% security for that transaction. So that happened, that was successfully completed a year or so ago. As I say, in just in 1 year, they've witnessed that huge leap in growth from £3 million to about £15 million. And again, it's put them on the international arena now. It's put their name out there and they're picking up more contracts as a result of it. The other area which I haven't touched on hugely, but is a very important part of what we do, is looking at credit risk insurance. Now, again, I must reiterate, we're not here to compete with the private market. There is an abundant insurance market out there, very happy to look at debtor turnover figures and insurance. We don't wish to compare to them or to compete with them. Where we fit in is where they have a restricted appetite, whether it's because of the country that you're operating in, whether it's because it's a capacity restriction. So if you cannot find insurance in the private market, as long as it's not rich OECD or it's not EU countries, then it's worth talking to us about, and we can look if we can assist. Now, the reason this is important, the reason we take a slightly different view, it's not just protecting you against non-payment by your customer. It's also protecting you against the occurrence of a political event in that country. So as we may have seen in some of the African countries recently, it's been difficult to transfer currency out or to buy sufficient currency to make payments overseas. They've had sort of different arrangements with banks. Also, restrictions that we've seen in Qatar recently. If an insurance policy had been in place prior to that, and that had prevented the currency coming out, we would have been able to pay and ensure that that money was paid to you, and we would then go and try and recover those funds ourselves. Now, this particular company, this was an interesting one. They were, again, self-grown. They were involved in providing friendly bacteria as fertilizers. Apparently this particular bacteria is very good for beans, pulses, those kind of crops, and they had a customer in Ukraine who was starting to grow and be about 30% of their turnover, so it's becoming a very important customer for them. When the unrest started to happen in that region with their very near neighbours, the private insurance market started to withdraw from that area. They still continue trading. It was hampered by the fact as well that this is obviously an agricultural business. So it's difficult to try and structure it evenly throughout the year. You can't get payments in advance from farmers. They only wish to pay upon delivery. They have a very short cycle themselves. So they wish to retain this important relationship for them. But as a small business, they were unable to take, or they were not prepared to take the risk of non-payment, as it would have decimated their business essentially. So as the private market started to withdraw, that's when we can start to step in. And again, the bank was looking at the funding arrangements, weren't happy to provide facilities that were uninsured, and introduced the organisation to us. Now, in this instance, we weren't withdrawing from the market, but we had to pull back our criteria. Normally on credit risk insurance, we can look up to 95% of an invoice value. In this instance, we were pulling back to 85-80%. So the business itself did have a slightly higher risk, but at least we were still in there. And they had the comfort of knowing that we had undertaken our due diligence, we'd looked carefully at their buyer, we'd looked at the payment history. We were prepared to take on that political risk, and therefore that relationship was unable to continue. And again, that business, through the Ukraine contract, which has become a more important customer to them, continues to grow and prosper. Now, I've talked very much so far about the services that we can provide for you as an exporter. We as an organisation have had some changes quite recently which will really open up the support that we can provide to a whole range of businesses. Now, this will be around providing support to the supply chain. So even if you're not an exporter yourself, but you provide components, materials, consultancy advice to a business that will ultimately export, as long as they need those components, articles, as long as they're essential to achieve their export drive, then we will be able to provide the same level of support in terms of government guarantees to your business as well. Now, at the present time, this is just focusing around Tier 1 suppliers, but in the future we're hoping to be able to roll that out to further companies down the supply chain. Again, it's worth bearing that in mind because as an exporter, if you have a large contract and you anticipate some quite rapid growth, you're relying on your suppliers to be able to grow with you. You may have specific components, you may have a long-standing relationship, you may not want to shop around to find alternatives, so it's in your interest to help your suppliers grow with you. So again, this could ultimately help you, so it's worth bearing that in mind if you are looking at that. Now, as I mentioned, when we start to look at a transaction, we look at the entire trade cycle. So we look at the moment from when you have to start paying your suppliers. We're interested in what your cash inflows and outflows are, right up until the moment when you receive those funds in. So our support really is very much around a contract by contract basis, and it's worth bearing that in mind. We're not here to replace your bank at all, and we do not wish to do anything to disrupt that relationship. We still wish your bank to be there to provide you with the primary line of advice to structure the transactions as they see fit, but really it's then up to your bank to decide to apply to us for that additional support. Now, one thing I didn't mention, which hopefully will be useful, is that this is free support. We do not charge a penny at all for issuing our guarantees. The reason we do that is because we're sharing the risk with the bank. We actually share the fees with the bank also. So as an exporter, it's free advice. The only thing that you would pay for is the credit risk insurance premium if you were going to go down that route. Just going back to that point on costs and with insurance, there is the perception that single policy cover may be expensive. Now, it's worth talking to us because it may not be quite as you would expect. In the private market, they would prefer not to do single policies, not to do single cover, simply because if they can do whole of debtor turnover, it provides a natural spread of risks for them. With us, however, because we're not looking to make profits, we don't have shareholders to satisfy, and clearly we don't want to make huge losses, but we do take that different view. Now, a lot of businesses may shy away from looking at debtor insurance. The way it's been sort of portrayed to me, though, is that we have a lot of mandatory insurances around our assets, around our vehicles, and actually a debtor balance on the balance sheet could actually be a very sizable asset, and it is worth looking at the insurance there. So in terms of accessing us, if you were interested in pursuing that route, what we are able to do is just provide you with an indication of the premium range that could be. So it will only take a couple of days for us to turn around and do that, but that will be country specific. So at least you'll have an idea at the outset as to what our appetite might be towards that country and how much it may actually cost you. So it's worth just checking out on our website, just having a look at that information.